Hello again, this is Andrew Westhof, owner and senior loan officer of Homes Mortgage Lending, and this is your interest rate update for Friday, August 26, 2022. I normally do these on Thursday, but I wanted to wait until Friday this week because inflation numbers came out this morning, and that was the biggest thing that was going to impact rates. However, it's not having a huge impact on rates because there wasn't much change, but we'll get into that here in just a moment. So currently, interest rates, unfortunately, this week are up a good tick. So I'll show you what the Freddie Mac Survey is. Freddie Mac does a survey every week, and they survey interest rates for multiple different lenders, mortgage brokers, banks, credit unions, big retail lenders all over the country, and they come up with an average. So right now, this is from yesterday, they're at 5.55% was the average. Note that this is because you're about to see my rates, and they're going to show a little higher, so don't need to go, Andrew, why are your rates higher than the national average? They're not. This is a weekly average, so week over week. Rates have kind of ticked up pretty much every day, except for today. They've come down a tiny bit. So the other thing to note is that I'm going to show you my rates with no points. These rates come with points. So my rates are actually very favorable in the market currently. So if you're out there looking for a home and you want to work with a reputable lender, I'll put my contact information in the notes. I'm licensed anywhere in the state of Michigan, so feel free to contact me. I'd love to assist there. But let's get into where we're at currently. Oh, sorry, one other thing. I wanted to show you what the Fed's inflation, the inflation numbers came out at. So they expected an increase of 6.8%. They only got an increase of 6.3%. So a little bit down. Rates came out this morning a little bit lower because of this. The Fed made some remarks that there's still inflation's still high, and they're likely to be aggressive with the increasing the Fed rate, which they meet next September 21st. So I think the kind of combination of those two things are a little bit of a stalemate, and they're not decreasing the mortgage interest rates as much as we would hope because of those Fed comments. So let's take a look at where Homes Mortgage Lending is. I changed the pricing on this. If you've watched my previous videos, I was doing this on a $375,000 purchase. Decided to lower that down to $250,000 to be more in line with what the average median home purchase price is in Michigan. So currently today the rate's 5.686% with a 5.845% APR on a $250,000 purchase with 20% down, 740 or higher credit score, 1 unit single family primary residence on a 30-day lock. So I'll show you what that looks like. So principal and interest, $1,159 and 3 cents. I estimated $75 a month or $900 for the year for homeowners insurance, and $500 a month or $6,000 for the year for property taxes. With those estimates, an all-in payment would be $1,734 and 3 cents. So to give you an idea of what that principal and interest only, not including the escrow, what that is. So on this is a loan amount of $200,000. So the math is easy. $579 and 51 cents. $579 52 cents per $100,000 borrowed, or for every $10,000 borrowed, $57.96. And then an out-of-pocket would be about $61,900 in this situation. This is based on Southeast Michigan, where taxes are paid in advance, and taxes vary quite a bit from area to area, so the tax amount will vary in a lot of different municipalities in Michigan. And if if you're on the west side of the state, you'll pay your taxes in arrears, which means your taxes are a little bit less when you get your mortgage, so your out-of-pocket will be a little bit lower. But I hope this is helpful to give you an idea of what that payment will be if you're doing the math at home. I will include in the video notes my contact information. If you have any questions, feel free to reach out. We'll be happy to assist, and I will hopefully be doing one of these again next week, hopefully showing some lower interest rates. So keep your fingers crossed that the trend continues from today into next week. But I hope you have a great weekend.